I'm James Gruber and welcome to the Morning Report for Friday the 17th of July. Well, it was almost a case of sell everything overnight. US stocks were down, bonds were down, and most commodities were down too. A continued sell-off in semiconductor stocks weighed on sentiment, despite generally positive earnings results and economic data out of the US. Meanwhile, the Iran war continues to rumble on in the background, and that's helping the price of some commodities such as aluminium, but not aiding others like gold, where risks of higher inflation occupy investor minds. Let's take a deeper look at what's happened with Aussie futures, commodities and currencies. The ASX is poised to open lower, with index futures down 0.2%. Speaking of the ASX 200, yesterday it closed flat at 8,841 points. Banks steadied the benchmark against a BHP-led mining sell-off. BHP shares slid 2.3% after the world's largest listed miner warned that copper output could fall by as much as 16% next year, citing an expected decline in ore grades at its flagship Escondida mine in Chile. Also adding pressure on the stock was an 8-hour work stoppage by employees at its Port Hedland iron ore operations. Today could be a tough day for the ASX given the falls in share markets and many commodity markets overnight. And on those commodity markets, global oil prices dropped but remain near the highest since mid-June as the Iran war escalated, with Tehran asking Yemen's Houthi movement to be prepared to close the Red Sea oil export route. Brent crude futures settled 0.8% lower at $84.23 a barrel. Base metal prices were mixed on Thursday. Copper futures were flat, while aluminium futures climbed 0.9% on continued supply worries. Gold futures declined as escalating Middle East tensions reinforced US rate hike bets. The futures settled 1.5% lower at $3,992 an ounce. Iron ore futures were little changed as traders weighed ample supply against Port Hedland strike risk. The futures settled down 0.1% to $98.81 a tonne. Let's now take a look at currencies. The Aussie dollar was last trading 0.1% lower at 69.97 US cents. Taking a step back now to see how Wall Street and other world markets did, the Dow Jones index finished down 0.2%, the S&P 500 dropped 0.5%, and the Nasdaq lost 1.5%. A closer look at the trading day there. US share markets were lower as weakness in chip stocks weighed heavily on indices despite generally upbeat US economic data and what has so far been a strong earnings season. Among the 11 major sectors in the S&P 500, communication services were the biggest percentage loser, while consumer staples gained the most. Memory chip makers were among the biggest laggards, with SanDisk, Western Digital, Seagate Technology and Intel down between 5.8% and 12.6%. They helped drag the semiconductor index down 4.3%. Healthcare stocks were up 2.2% thanks to a 1.2% gain in United Health after the company beat earnings estimates and hiked its 2026 forecast. United Airlines fell 1.8% as surging oil prices weighed on its forward guidance. Meantime, GE Aerospace slid more than 4%, even after the company lifted its 2026 profit forecast. In US economic data, a spate of indicators released on Thursday US time showed the economy's resilience. Retail sales increased 0.2% in June, its lowest gain in 5 months, but in line with expectations. Weekly jobless claims fell 8,000 to 208,000, the lowest in 2 months. US government bond yields were modestly higher after data on consumer health and the labour market did little to modify investor expectations on the path of near-term interest rates from the Federal Reserve. The US 10-year Treasury yield advanced 2 points to 4.56%, while the US 2-year Treasury yield gained 3 points to 4.16%. Moving to the European markets now, the continent-wide FTSE Euro First 300 index ended up 0.1% and the UK FTSE 100 was 0.5% higher. Europe posted slim gains for the third straight session, as caution over the Middle East war kept markets in a tight range despite strong earnings. Basic resources stocks were the biggest laggards on the benchmark. Media shares led the index with a 1.4% gain. Tech stocks were flat. ASML jumped 3.2%, while semiconductor stocks ST Microelectronics and BE Semiconductor slipped 4.9% and 3.2% respectively. The sector has shown signs of cooling this month following a strong run in the previous quarter. So let's now take a look at what's on the watch list. In the US, there are housing starts and industrial production. In Europe, the Consumer Price Index for June is out. And that's it for today. For further developments on the local trading session, please tune into the CommSec Market Update podcast this afternoon and, of course, the Market Close video. Have a great day. Okay.